Anyway, let's get into it. Like David with this, always remember that your present situation is not your final destination. The best is yet to come, and it most certainly is. I've been privileged to speak on many podcasts of late where we're talking about the future of the industry. And the thing I keep saying is that we've got some glory days ahead of us, and the best is yet to come. And I know the whole issue around regulation and best interest duty and what goes on in the marketplace and federal elections coming up, all that sort of stuff, always makes you sort of stop and think, yeah, at the moment it's tough, but it's not where we'll finish up. It's not the final destination. And we've seen the market share of brokers' originations increase, which is great. Some information that was put out to media, where I think it's roughly 2/3 of all loans originated, or home loans, originated through brokers. That's great, but you're only good as your last shot. So we need to be able to keep that up. But I firmly believe, and I've been saying this for years now, our industry will reach 70% of originated home loans done by the broker channel, and we have every chance to get to 80%. And yes, it'll take some things to happen as well as time, but things like technology is a piece that will make and enable those things to actually happen to get that style of penetration levels. We'll most certainly hit 70% and above. The UK does it. There's no reason why we can't. And that's why I say the best is yet to come. So what I'm after is what I'd like to see is for all of you folks to stay focused on what you do and do well, and we'll take care of all the garbage that flows around behind the scenes. So let's have a look at what some of that looks like, what we're finishing up with at the moment, and where we jump into next year. So we're still in discussions with the Department of Prime Minister and Cabinet, the Treasurer's Office, as well as Treasury, in regards to the issues surrounding the best interest duties, whereby ASIC landed in their regulatory guidance in RG 273 saying that credit cards would have to be individually assessed for a best interest duty when they're in a bundled home loan. Now, and I've said this before, both Treasury and the Treasurer's Office and politicians and all of us all agreed that the debt would apply, the credit cards would be applied to the predominant debt in the bundle. And 99% of the time, that's the home loan, right? You know, very rare you're going to get a $5,000 home loan and a $100,000 credit card, right? So in that case, yeah, the credit card would win, but most of the time it's not. It is the home loan. That's the way it was agreed to be assessed. That's what government and Treasury agreed to. And then ASIC took what was basically half of a paragraph and rewrote umpteen pages. I think it's somewhere up around 80 pages of regulatory guidance. And this piece that it included about credit cards being individually assessed. That's not what was agreed to. That was never its intent. It needs to change and get back to where the law was written, and for ASIC not to overreach the law, which they've shown over the years, and we've proven it multiple times. And I'm in discussion with very senior politicians on both sides of government at the moment around how ASIC constantly overreaches the law. They are the policemen. That's their job. Good on them, be the policeman, but you're not the law writer. So bugger off out of that scene. You're not meant to be doing it. And that goes with consumer asset loans, or for let's calling it colloquially car loans for simplicity's sake. It's more than that. It's anything that's a consumer loan. But, ASIC came out with guidance almost this time last year, albeit it was a week out from Christmas on a Friday. I think it was Friday the 18th at around 4:50 p.m. my time here in Queensland, where they set some guidance out saying, if you're a mortgage broker, remember the differences between mortgage brokers and finance broker. Mortgage broker does home loans, finance broker does no home loans, in simplistic text. It's not quite as easy as that, but we'll tag it as that for the moment. But if you're a mortgage broker and you write a car loan, you need to do it at the lowest possible rate. Those of you in the room who write car loans, give me a little hand wave. Is there anyone there? A couple of you, yeah? You're meant to do it at the lowest possible rate if you're a mortgage broker. Well, those of you who deal in that area will know that if you're on flex commissions, that is zero. You can write a loan with no commission in it. Well, we're not a charity. And that's what I went straight back to ASIC on and told ASIC, said, this is, as soon as I got the email, this is unconscionable. You can't expect anyone to work for nothing. You don't, we don't. And you can't be given guidance that suggests that should be the case. And you know what? I immediately got a response. And the response from ASIC, and it really happens, the response from ASIC was, out of office reply, gone on holidays for Christmas. And I tell you what, the colourful language let rip at my end of the equation. And I then wrote to some very senior people within ASIC and expressed my disgust with, one, they've gone and dropped this at the last minute before Christmas. 2 gone immediately on holidays and turned their out of offices on, and 3 have had no discussion with industry on this, and it's highly inappropriate. And albeit I had conversations with senior people within ASIC a couple of days before Christmas last year, and they did agree with our position on it. Unfortunately, the powers that be above them had other ideas. So we've been battling this together with the credit card piece, with the DPMC, the Treasurer's Office and Treasury, and it's still a discussion that'll happen before Christmas. And although an hour ago my meeting got moved slightly, I am in high-level discussions with the Chief Whip in government to lobby to have this changed. And everything else is going, they're all a bit distracted on other things, but obviously as we go into a federal election, once the election's announced, nothing will happen, unfortunately, because we go into a caretaker government. And so no decisions gets made then until after the election. So they're all finished for the year, basically, from the House's point of view. So there won't be change just yet, but we need to line this up to get it right, because it's wrong. It's not what was meant to be, and it was not what was agreed to be either. And therefore it needs to be put right. And we will get it there, because I'm not going to let go. I'm like a bulldog with lockjaw, not letting go for anything. You have to shoot me first, so good luck with that. The other piece there is the extension of the best interest duty and responsible lending obligations repeal. I hate that word repeal, it's technically correct, but responsible lending was never going. In actual fact, one of the missions were to make borrowers more accountable for the information they supply, which is a good thing, because otherwise they just point the finger at the broker and say, well, no, the broker's given us dodgy information. Quite often, if not the majority of times, certainly not the case. And unfortunately, that hasn't gone forward to strengthen the provisionings that sit around the borrower's obligation. And as I said, the responsible lending was never going, it was just being modified. And a part of that was to bring in the extension of the best interest duties so that finance brokers, not the mortgage brokers, we spoke about them before, the finance brokers will come under a best interest duty as well. And there's good sides and bad sides to that, but the reality of none of that's happening. I spoke with Josh Frydenberg, must be 2 months or so ago now, and on a Zoom meeting, and I asked him where both of these things were at. Couldn't answer the question. I asked him, well, does he think he'll get some before Christmas? Couldn't answer the question. And all those things mean that it's not happening. I then spoke about a month after that with a senior senator and asked a bit more around this as to what their thoughts were and a bit more of an understanding as to why this roadblock, which I got, which I was very thankful for. And principally, they aren't going anywhere. The extension of the best interest duty and responsible lending will take years for it to get somewhere, if it's to ever get anywhere. But if it does get somewhere, it's going to look vastly different to what it does at the moment, because there's so much from a political point of view, an opposition and ministerial point of view that's opposing the way it was written. It's going nowhere. So don't expect those things to happen, because they're not. And one of the principal things that you'll see when we talk about mortgage brokers and finance brokers as we go forward, and have been since the best interest duty came in, is that some things will happen for mortgage brokers that won't happen for finance brokers. And CDR, open banking, is going to be one of those. And one of the reasons for this is that the best interest duty is what's called under law a fiduciary obligation. So mortgage brokers, like financial planners, have now these days a fiduciary obligation under law called a best interest duty, which means there's certain things they'll get entrusted with. That usually means more work, mind you, but yeah, it gives you things you're entrusted with, whereas finance brokers don't have a best interest duty, so they have no fiduciary obligation under law. Therefore, they're going to miss out on some things. And that's not right, because we're pushing hard with the Minister and Senator in question about making sure that open banking was available to finance brokers, because the way the legislation is at the moment, it's not. And unfortunately, it's not going to be because of this fiduciary obligation. So like I said, there's good and bad within that, but we're kind of stuck at this point at the moment until things go forward. And we're also stuck with the fact we have an election soon to be announced. They're going to make no decisions unless it's going to get them political brownie points and win the votes. This sort of thing doesn't. Actually, it's proven to be the opposite as far as that's concerned. So it's gotten dumped, and we'll see where we can pick this all up once we know who is in government, and we'll keep having our conversation to keep pushing things along on both sides of the House, so the shadow and as well as the current government. The other piece there is in design distribution obligations at the bottom of the page. I won't waste a lot of time on that. It's been implemented into industry. You've probably all seen target market determinations. Yeah? No? Target market determinations. You're very small on my screen. I'll take it as you probably have. Target market determinations is basically meant to be a statement under the design and distribution obligations. This piece of legislation is actually a lender problem. It's not a broker problem. It's actually a lender problem. Yet certain parts of our industry have tried to make it a broker problem. I'm really, really annoyed and quite angry about that, to be honest with you, because it's not a broker obligation at all. It's a lender obligation. We get looped in as a part of the distribution piece, and that's where this target market determination comes in, that you as a mortgage broker need to ensure there is a target market determination that is basically a fit for purpose statement that is relevant to the loan that you're offering a client. Now, most of the aggregators, I think, and lenders have got this up on their systems and technologies where you can see the target market determination. The ones I've seen are about 4 pages long. It's meant to be a paragraph, not 4 pages. That's a product spec. The target market determination is meant to be about a paragraph as agreed with me by Treasury and ASIC. And it's just meant to be a short fit for purpose statement that basically says the loan you're offering the borrower is fit for the purposes in which they're looking to use it for. It might have a little bit more detail than that. Maybe I oversimplified a little bit, but principally that's it. It was only ever expected to be a paragraph or so. It's turned out to be, in most cases, to be about 4 pages. Go figure. But yeah, lender issue, a bit of an issue for us, but hopefully technology drives the answer to that, makes it as simple as easy as possible. What I've found so far, though, in the marketplace, nobody's having any real problems with it, nor were we ever expecting them to have problems with it. But it is something that you need to ensure that you do. There has been clarifications from Treasury saying that as a mortgage broker and as a financial planner, if you are one, you do get a little bit of levity in regards to the obligation because you are under a fiduciary duty by law, which is the best interest duty, and that is that you don't necessarily have to comply to the target market determination, but you need to keep records and prepared to be reporting any breaches or potential breaches of a target market determination back to the lender, which goes back to the regulator. So you still got to do some work, even though you get a little bit of reprieve saying you don't have to comply to a target market determination if you're a mortgage broker. Finance brokers, you don't get it. Mortgage brokers, you do. But there's one hell of a but that sits off the back of this. By God, you'd want to document it well and truly to the hilt as to why you didn't comply to a target market determination, because if you get audited by ASIC, they're going to drill you long and deep as to why you didn't comply to that target market determination. Be a brave person to step out into that world, but it doesn't mean you can't, and it doesn't mean you shouldn't. You just need to be extraordinarily well documented on that particular piece as to why you did. All right, so there's the heads up on that. Let me try and move to the next page. It won't let me. How about that? Here we go. That's the one. Other pieces that we're working on, of course, we've started the reference checking protocols. That was the beginning of October. That seems to be slowly rolling out. It's got a bit of angst to it. It's a new piece of regulation. It's a little bit tedious. We're not directly caught in this as an industry association, but we will be a part of it in a slightly modified version of what reference checking looks like when it comes out of the association. But industry expects us to be part, and we will. And basically, it's just like an employee reference that our industry has done for every day. We've reference checked every member that we've ever taken on. And so no big deal, no real change. But hopefully the big change that will come of this is getting rid of those damn grey separation letters. That was an industry initiative. It was not, and when I say industry, the aggregators and lenders brought this out. I'm not sure which one. It's never been a piece of law, and it's been an annoyance since it started. So the whole objective is to try and dump the separation letters and go to this reference checking protocol. Other pieces is there, the Consumer Data Right Access, CDR, under open banking. We held a Q&A with Whitey session on that not long ago. There'll be a lot more coming to you in regards to how you're going to be able to access CDRs, open banking, to speed up the process of getting the loan approved. Here's where I said earlier, tech's going to drive us that 70 to 80% market share. This is a part of it. Unfortunately, because of the fiduciary obligations with the best interest duty, this doesn't apply to finance brokers yet. Maybe one day it will, if we can get it all over the wire. But for now, this is about mortgage brokers. and the access to being able to facilitate and your client to speed through the process. We have a special provider who's licensed to do this, that is bringing special advantages to FBAA members. They'll be able to access open banking through their platform. We've started early conversations on that. They were on that Q&A with Whitey show the other week, and there'll be more out to members as we get towards the end of the year into early new year before all this starts. The other pieces there, the WA is working on electronic mortgages, and the digital signature piece has been done federally. These things are all pieces that will roll out through state and federal governments as a means to legislate temporary measures that were brought in through COVID to make them permanent. And they will become permanent. They all make sense. And again, these are the pieces that will turn around and expedite that level of penetration of mortgage broking. So there is a wonderful future ahead of brokers as we go forward. Yes, there's more regulations. And that's because we're a professional industry and people see us as that, and that brings legislation with it, unfortunately. But that's what we do, so you don't have to worry about it. So you can get focused on doing what you do the best. There's been some changes in deferred sales model for those of you that have been involved in add-on insurances and various products like that in the motor sector. Compensation scheme of last resort is something that's been proposed and most likely coming in. And basically that revolves around being an extension to professional indemnity. And when you get things like AVCA, the Ombudsman, rule against you, and for some reason there isn't funds there to pay whatever the compensation is to the borrower, if there happens to be one. This is a proposed pool of funds that sits outside of that can be reached into to pay compensation to a borrower, should it be appropriate that be the case. I know that's a big conversation, so let's leave that one there. We are working with AVCA and have done very closely for a long time, so we're trying to see these things play out, but it's certainly not a quick thing to resolve or an easy thing. The compensation scheme last estimates were probably cost industry $28 a person to actually contribute to that scheme. So everyone would have to contribute to it, $28 a year. And hopefully, well, if that goes forward, it just means that if there's the pool that we would create as an industry couldn't be touched by another industry. It's all siloed into specific industry pieces. It's got to finalise as yet, but that's generally what's being proposed. There's been various conversations I've been having with the Productivity Commissioner in regards to small business and commercial lending. And I'm just going to jump over here. It was similar to the conversations when I represented industry at the House of Reps Standing Committee on Economics at their last tribunal, which was in July. They also were heavily focused on brokers, the increased cost of regulation to brokers in relation to commissions that they get paid, digital signatures and documents on the conversation again, as well as dispute resolution services and commercial lending, another higher level of conversation. Remember, these things here are a tribunal. You don't get to stand there, or in my case, sit there, it was done by Zoom, and spout and, and spruik about the industry. That's not what this is about. It's a tribunal here, like a court of law. They ask the questions, you answer them. And that's basically what we did. But it's been interesting when we look at that and the Productivity Commissioner asking these questions about small business lending. And many people have come up to me in the past and say, hey, Whitey, you think that the small business and commercial lending is ever going to come under the NCCP? And I've always said no. And I've said no for two reasons. One, it's too flexible. That style of lending is too dynamic, too fluid. It doesn't fit in a box like home loans. It's never going to happen. And then secondly, it's not even on the table for a conversation. So don't stress, don't sweat. It's a nothing because it isn't on the table being discussed until now. So we have a regulator and politicians talking about small business lending, commercial lending, and regulation and education. Now, I had further conversations with the Productivity Commissioner after this, actually only just last week. And he and I had a private conversation, which I won't go into whole bits and pieces in it, but basically I said to him, look, where is this going? And he said, as far as he's concerned, nowhere. That doesn't speak for politicians, but for him, it was a piece of research and a review, nothing really to see there, nothing for them to do. So they're not going any further with it. Whether politicians do or don't, well, they're my next round of meetings as I get through those before Christmas, where we're talking about this. And the next point there, the research that we've conducted for the 2022 Broker Remuneration Review. Now, you all this week or late last week, would have got an email from me talking about this research we've just done. And basically, we went out to the marketplace, researched a whole lot of borrowers as well as brokers, and got feedback on the realities of where everybody had landed and what they felt about brokers as a part of a submission we were putting to government. And basically, without us leading the answers for the questions that we were asking, so we didn't do that. What I was interested in knowing is, where are the pain points that I need to help to resolve so that I don't get caught unawares as we go into a federal election? Bottom line is, there wasn't any. Borrowers, and I haven't got it in front of me, so I'll punt the data a little bit. 93% of borrowers didn't care that brokers get paid commission. Around 93, 94% believed, were thoroughly convinced that the brokers acted in their best interest. So there's all this research just stacked up to say, you are doing a wonderful, wonderful job. The borrowers see it and love it. And from a political and regulatory point of view, there ain't nothing to see here. There's nothing to change. Yes, they will still do the 2022 remuneration review, which is one of the final recommendations from the Financial Services Royal Commission. That was a mouthful. That will still happen. And we still may have some fights along the way. But this research and the 164-page, I think it was, submission that we put to every regulator and politician I know that are relevant to this conversation, and I've been doing this since 2008, so it's a pretty damn long list, here are the reasons why there's nothing to see here. Here's the data that you want. That if somebody brings this up, says, well, wait a second, it's not supported by data, it's not supported by borrowers, in actual fact, they support the broker model as it is. So there's nothing to change here, nothing to see, which is why I'm thoroughly convinced, although we may have a little stoush along the way, but I'm thoroughly convinced we'll come out on the right side of this. There's no reason why not, because there is nothing to suggest we're doing anything wrong. There is nothing in the data to say that we're doing a bad job. And what we have to remember is, when the Royal Commission made these recommendations, they were working on data back at 2012. Well, when this review gets done, that's 10 years old, that data. And at that point in time, we didn't have conflicted remuneration legislation. We didn't have the best interest duty, as well as a swag of other pieces of legislation that's come in. None of that existed when the Financial Services Commission made their recommendations. We have those in place now, and the data shows, since that's been in place, if you wanted to challenge anything, there ain't nothing to challenge. So we're good. So have confidence and faith in that. And like I said, between now and Christmas, and as I go into the new year and right the way through to the federal election, I'm in constant conversations right now, right through to Christmas, and propose as we go forward with all politicians on both sides of politics to ensure that we are not a political football in the next federal election, and that our model for commissions isn't getting screwed with, right? The other piece that we put in this research, we conducted a research piece, the additional piece we put in our submission to government. It was proactive. There's no submissions being called. This was a preemptive strike by us, but that we also did additional piece of research around clawbacks. So we've included quite a lot of commentary, and is a part of our conversations, about clawbacks, how it's been wrongly placed, it's been wrongly used, it's being abused by lenders at the moment with cash incentives to borrowers, which puts brokers in a very conflicted position into trying to act in their best interest when you've also got your income being up for grabs as well. That's unfair, and that's not appropriate. And that was never the intent of where this is always meant to land. So although, as much as I would like to see clawbacks completely banned from our industry, and I've been on that bandwagon since they started, but we know that there is a legal reason and a legal appropriateness as to why clawbacks exist. So if you breach the law, you breach your agreement, this is a part of the hook that says you're going to pay a penalty for breaching the law. We all got to pay our penalties if we do something wrong. But when it comes to life events, things that are outside of your control, client wins lotto, moves overseas, decides to sell and rent for a while, none of those, or gets divorced, none of those things are your issue. You should never, ever, ever suffer a clawback for that, right? As it was, what people forget, unfortunately, well, fortunately, some may say unfortunately, I have been in this industry now 43 years. So I recall when this was all brought in very, very clearly, and this was brought in to stop churn of portfolios, not churning or moving individual loans. It was to stop brokers taking $100 million worth of loans from this lender to that lender and just doing it for a fee basis. No benefit to the borrower whatsoever. They were just generating revenue. Bad outcome. That was appropriate, that stopped. But that's what clawback was meant to stop, not the movement acting in the best interest of the client, even though we didn't have that duty back then, but it was for that reason, not to stop someone moving a borrower from that lender to that lender for all the right reasons that benefits the borrower. It was never the intent of clawbacks, and it's warped to this day. And the other piece that people aren't across in the large, and same with the lenders, and unless you've worked in the bank's treasury area, you're probably still not across it anyhow, is that there is a small, very small margin put into the marginalisation of an interest rate that is there to benefit or to offset the position of a loan terminating early. That's why bank branches don't have clawbacks. They don't pull back on the bank branch P&L if a loan pulls out early, because there's this little margin in every loan that's a provision for a loan terminating early. Every loan, regardless if it's broker or branch written. That means on the very small percentage of loans compared to how many are written that actually terminate early, it's easily catered for in this small provisioning within the interest rate. So therefore, when lenders hit you with a clawback, they're actually double dipping. And that, and ladies, cover your ears, shits me no end, let me tell you. And I've had quite some extensive conversations with media on this lately. It's a part of my conversations with the Shadow Treasurer in 25 minutes time. So I've got to be careful of my time. 25 minutes, I'm on the hook with the Shadow Treasurer, Dr. Jim Chalmers, with the Chief Whip for the House and all the other politicians, whether it be on Labor or Liberal, that I'm speaking to, how wrong and inappropriate clawbacks are. Yes, they're going to stay if you breach the law. Otherwise, they need to go. Now, how far we get with that, government and regulators aren't going to completely ban it. They can't. And what they've done today is basically said, this is the maximum limit. We want that limit pulled back to 12 months, not 2 years, pull it back to 12 months. And then it's on lenders. You know, lenders could turn around and stop charging you clawbacks like that tomorrow if they wanted to, because it's up to them. They don't have to. It's not law that says you must charge a clawback. Law doesn't say that. They do it because they can. Now, wait on, lenders, you've already got it in the interest rate. So why are you charging the broker again, right? When life events happen, it's just completely wrong. Anyhow, I better move on from that soapbox. But that's my view on clawbacks. We've taken it to government, taken it to regulators, and again, bit of lockjaw on that, never letting it go until it's right and appropriate. Let me move on. We've done the piece there on the House of Reps, AFCA. I touched on that slightly. You know, AFCA has had an independent review done it by I think, I might be wrong on this, I think he is a retired federal court judge. It was done independently. It came up with 14 recommendations. A lot of it's stuff that we've been speaking to AFCA over a long period of time. Last year, we did a presentation to over 50 case managers to talk about the broking sector, how it worked, what the due diligence are you go through when you write a loan, and blah, blah. Went on for about an hour to make sure that they understand the work that brokers do. I'm trying to get some balance to the thinking of case managers, which isn't always easy within AFCA. But we've been liaising right from the chair of AFCA, the CEO, and the senior executive general managers within AFCA for the last 2 to 3, well, it's got to be longer than 3 years now. Just trying to make sure we get things balanced. And it's a difficult piece, so don't get me wrong. So this independent review sort of spoke back to a lot of those conversations we've been having, as well as all the submissions that have gone on over the years. The interesting thing is the last recommendation that says, the recommendation, and all of these are supported by government, by the way, they just won't enact for probably 6 months because of the election, but well, possibly not. It depends how much power AFCA has to move independently on this, which I'm not sure of yet. But it's to say that credit reps, ACRs, credit reps shouldn't need to be members of AFCA, and only the ACLs. Now, that's got good and bad points to it. We don't have time to go through it, but we are speaking to the heads of aggregators within our concierge program, which is our top-end aggregation committee. We are talking to them about this. It's good for everyday brokers who are credit reps. If it goes through with that recommendation that you'll no longer have to contribute to AFCA as a member, it may put bigger pressure on your license holder, your aggregator, and could see their cost of membership go up because AFCA, not the most profitable of businesses on a good day. I don't know how much future government support they'll get to prop them up to what extent, but the loss of revenue from credit reps will be significant. And I can't see them walking away from that revenue, but we're yet to see how that plays out. And obviously we'll be very close to that conversation all the way through to see how that plays out. But that's the latest on the AFCA front. And look, I've said this before, I'm going to say it again. It's never about waiting for the storm to pass. It's learning to dance in the rain. That's what we do. We don't want you to worry and stress on that. You've got enough on your plate. I've been doing this for the association since 2008. Back in those days, we're probably doing 4 submissions a year. These days, we could do that in a month, definitely in 2 months. And it's only going to be more. As we finish off something, something else is going to come along. There's always the next something. But we're ready for that. That's what we do. And I just want you to stay focused on what you're doing, because the data shows how great a job you're doing. And in the meantime, we'll keep doing this stuff. We'll talk about it in the media. We'll keep the pressure on lenders. We'll keep the pressure on the consumer advocates who haven't stuck their head up for a while. I've enjoyed that bit of sport when they do, but anyhow, maybe they'll come back to the table again. We can have another swing, but we'll keep the conversations going in the media. You would have seen that a couple of weeks ago now, we spoke in the media about our concerns, where part of the research we conducted that 57.5% of borrowers said if their repayments went up $300 a month, they couldn't afford it. We're over 430 media outlets in 2.5 days with that, including 4 TV stations and 12 radio stations. The rest of it was all in the digital print medias. A big conversation. It's even reached overseas. It's a big concern. We've given that to government regulators as well, because what we can't have are the banks moving interest rates out of line with any movement of cost of funds from the RBA or internationally through bond markets. It's got a potential to be devastating to the marketplace, but this is where all of you are going to play the most important role, because even the research even showed that over 50% of people will look to refinance if their loans went up by $180 a month, right? So that's a lot of work for you. Keep us busy, keep us all going, keep driving those volumes forward. But we'll keep the pressure up in the media, always in regards to those conversations and more. Yes, we'll keep dealing with these donkeys. That's my job. I've got to make sure they stay in touch with them. And that man there down the bottom left-hand corner is Dr. Jim Chalmers. He and I catch up in, 20 minutes now. And we keep doing the dance in Canberra for as often we can get down there. Obviously, most things have been done by Zoom at the moment. They're only just starting to open their doors up again. But on a state and federal level, we'll continue all these conversations. We'll make sure, as we say, we do these Zoom stuff. There's a little bit of face-to-face, and you don't want to see what's below the line of the camera. That's it's only from here up. Same today, but we won't go there. But otherwise, there's a little bit of face-to-face and a lot of Zoom meetings. And we'll keep, obviously, our work with the International Federation, the IMBF, as well as the Small Business Association. The IMBF is there as a preemptive strike to stay ahead of the curve of our regulators, because when regulators in Australia develop regulations for us or potential legislation, they look overseas to see what happened there to deal with a certain something that they want to address. So we need to know what happens there so that we can effectively fight any discussions here in Australia. So the Federation continues on deep and strong. And if things are great to us at the back end of 2022, we will be holding the world's first international mortgage brokers conference at this stage in Canada, where we're going to look at issues in each country and globally. We're going to create white papers to governments and wind up get some great learnings from people from all around the world. Well, now more on that if we can make it happen, depending on COVID largely, and we'll go from there. And obviously, who are the brokers in the room? Just a quick show of hands. Who are the brokers? We've got any brokers in the room? We've got lenders, brokers. Hello, hands. Yeah, good. There's, I can see you. That's it. You're all small business people. Of course, we need to be part of the Small Business Association because they have different conversations than the ones we have with credit. So we stick across that as well. And yes, it says there 19,600 brokers in the industry. That is correct. It's actually a bit higher than that by about, I think it's another 83 or 84, whatever the number is. When we look at sizing the marketplace, and we updated this in our recent research, and that's gone, as I said, to government and to regulators, it doesn't matter the volume of loans you write. As far as we're concerned, we're looking at regulatory exposure and risk. And when we're talking to governments and regulators, we need to understand where that risk lies. And the risk lies within the totality of a market, not a share of that marketplace. So we always size the market like that. That's why you've seen other data that says it's a bit smaller than that. Well, it doesn't include everyone in the marketplace is the problem. We need to look at that from when we're having our conversations so that we're bang on with what we're saying. Because when you look, and this includes any washout from ASIC data, because it's what it's based on, is ASIC data. They have companies and the directors of that company both listed as credit reps. We wash all that stuff out and rationalise it so it's an accurate piece of data that is produced. Bit of the old pitch for the association, but anyhow, for 3 years in a row, we've frozen our membership. I can tell you now, we're $85 a year cheaper than our competitor. One of them were a lot cheaper than that as well. Shift Payments do a great deal for you. They give you a $200 rebate for signing up through them to use to pay your FBAA membership with. And if you use it to pay your FBAA membership, there's no fees or charges, no fees, no interest. It's free for you to use for using it for FBAA membership. You can do that over a 12-month period if you want. We continue to increase the free content that we deliver to you and the PD days and so on. The new member benefits programs out there. It's Christmas. Go have a look at it. Save yourself a fortune by using the member benefits program. And our education platform is built. It's going through its last review at the moment. It will formally launch in February, but there'll be a soft launch this year once we go through the next board meeting, which comes up on the 17th. So a lot of things have been done, a lot of things to help you out, a lot of free content. Because don't forget what Shift Payment offers to you. It's a brilliant offer to you and a brilliant opportunity. No longer get capital, of course. That slide needs to be updated, but it's a great deal. So use it. It's free. Why not? It's in money in your pocket. And I said this earlier, and I have done it before. The whole reason why I talk about these things, what we're doing with government regulators, is it's important to be aware of what's going on around you. But you yourselves need to stay focused on what you do best. And the data clearly says it. You're wonderful, wonderful brokers. Your borrowers love you. You're doing a great job. You act in their best interest. That's where you need to focus on. We'll sort out the regulatory stuff, but stay on your journey. Keep focused on what your future looks like. And it doesn't mean it's a straight line. I actually started out wanting to be a commercial pilot. I actually could fly a plane before I could drive a car when I was a kid. And that was my journey until I had major back surgery where I was in 70% chance of going into a wheelchair. That didn't happen, fortunately. And then I wound up going into banking. So I needed a job. My parents weren't going to let me stay at home forever and a day. And my journey went off on a different tangent which led me to be here today. And I never expected that. So your future is your journey to travel. Make sure you stay focused on what works best for you and just understand that journey is not always straightforward. It can take different loops and hoops and turns that you didn't expect, but that's what the journey is all about. Let us take care of all the garbage in the background. You keep focused on what you're doing the brilliant jobs at, because doubts will kill more dreams than failure ever will. Certainly so true. So have no doubts on where you're going. Keep focused on where your dreams are taking you. And don't worry about failing. Life's not a perfect journey. And yeah, there'll be trips, there'll be issues and challenges. You'll want to bang your head against all the times. That's a part of the journey. But keep focused on where you're going. That's what's important. I always have a conversation on mental health. I'm running out of time, but I will just quickly give this bit of an update, I guess, on mental health, and in particular on men's health. And it's not being sexist about this. It's just a reality. We are a male-dominated industry, rightly or wrongly, but it is what it is. But there's been increased data from a men's health point of view that every day, 8 people commit suicide through mental illness, males and females. 8 people every day commit suicide through mental illness. The latest data is showing that 6 of those 8 are now men. So guys, we need to look after each other. We've got to look after our mental health as well as our physical health. And it's the same with the ladies. You need to look after your mental health and physical health. The data does show that women are more likely to self-harm, where men are more likely to take their lives. That's just the data. But we need to look after all of us, regardless of gender. So please look after your mental health and your physical health. We do have the Assured program that is proudly sponsored by Suncorp. Ring that number if you're getting into a dark space and you are feeling like you want some professional counselling. Assured provides the counselling. It's completely confidential. We get no information as to what's happened, neither does Suncorp. Although the only thing Suncorp gets is a tally that says X amount of people have used the program this month, pay your bill. So we love the people at Suncorp. Say pay the bill because nothing's free. We know that. But that's how it works. And of course, we still support Are You OK Day and Beyond Blue and all the programs that are there to support your mental well-being. So look after yourselves, and there are things there that are freely available to you to help support you. And a piece I do want to finish on a little bit. There's a couple more slides and I'll be done. And we're going to time. Yep. Be kind to one another. COVID has been a real bitch. It's really been stressful. The first year, we also played with a bit and got on with things. The second part, we're all so busy it wasn't funny, but the tensions rose, and we've seen it in the way conversations have changed and the challenges for people, again, within their mental health. So one thing we use at our board is unconditional positive regard. And basically, that's being respectful to one another. It's perfectly fine to have strong, heated debate, but from our point of view, at a board point of view, you can have that at the boardroom, but when you leave that table, you respect one another's views and you always leave as mates, always the way. And it's the same way we need to treat one another, is be respectful and treat each other with unconditional positive regard. You don't have to agree with everyone. That ain't the point. It's about being respectful in the way we conduct ourselves. And any bad behaviours in our industry and anywhere must stop. And now we've seen it in government. We've seen the latest reports come out with harassment and abuse and allegations of sexual misconduct and so on. And so it's just some terrible things going on at government, both overseas as well as here. And I've seen it within our industry of people being abused and bullied. It's just terrible. A call out to the ladies, but firstly to the men, if you see any of those bad behaviours, you need to call it out. I certainly will. And ladies, if you want someone to stand beside you, I'm there beside you if you want us to be. And I'm sure there's many people in this industry, we will stand beside you, because bullying and harassment on any level is completely unacceptable. We don't need it. It's not what our industry is about. We're a family, and that's the thing we need to focus on. So a shout out to the ladies there. Don't let it happen. And if you need some support, reach out because you've got it. And lastly, Leah's probably already touched on this, but conference is on Gold Coast, the 11th of March. Be there. It's going to be an absolute blast. The day is full of fantastic content from here and from overseas, as well as at night time. Theme is heroes and villains. And you know what? At night time, yeah, we do let our hair down a little bit. It's a bit of a party. We do some crazy things. Maybe that picture in the top left-hand corner has something to say somewhere. More on that in the future. But we're going to have some fun. Hopefully you'll join us for that fun as well. And there'll be a little bit of this happening somewhere as too, because we all deserve a drink, I think, by the time we get to the conference. So we're looking forward to seeing as many of you as possible there, and have faith and trust. We got this. You take care, and thanks very much for having me along today. Sorry I couldn't be there in person.
Through it today and see where we go. But the first thing I want to say is, you know, if you want to play in the SME space, it is big business. And I don't need to quote the statistics. You all know that. But what I'm really interested in, and maybe by show of hands, who here in their database has SME clients? Almost the whole room. Now, I know it's early in the day and we haven't been live for long, but can I just ask you again, who has at least 20% of their client database would be SMEs? Fantastic. So some of us, I'm presuming, have probably already diversified, and others are probably thinking, maybe I should. And absolutely, we should be thinking about it, because if you have SMEs in your database, then you ought to be able to meet all of their needs, not just the mortgages, but everything, because if you don't, someone else probably will. So we'll walk through it. The dream is, it's easy. It's a new revenue stream for me, therefore I should do it. But you know, the reality is a little bit different. A lot of us tend to think, well, you know, what I can do is I can just diversify by getting a lead from one of my SME clients, flicking it over my shoulder to someone else to do. That's not diversification. It's certainly an option, and it's certainly one that will suit some businesses. But if you really want to play the long game, and we'll talk more about that today, then there's much more to it. So I've got to bust the myth and tell you it's not easy. It's going to take effort and time. Speaking of time, Leah, how much time do I have? Because I could talk about this for hours. Okay, I'll just keep going. So, oh, great, thanks. Obviously, we need to understand the market. So it takes some effort. You got to do some research, you got to do some analysis. You got to build some capability, invest in yourself, and understand the solution. So, you know, this isn't about the transaction, this is about the long term. And today, I'm going to step through two things. The first one is, what are the 5 sort of key areas? What's the pathway? What's the pathway I need to take if I want to play in this space? And then I'm going to wrap the session later with just an actual SME client case study, which is you know, which I have to thank Finstro for, because I worked with them in putting this together. And actually Finstro and FBAA have been incredibly supportive of what we're doing here. So the first thing is, when I talk about the 5 drivers of relationship success, let me ask you a question. What do you think some of the constraints are? Just give me some answers if you can. What are some of the things that stop us from being able to play in the SME space? Oh, number 1 on my hit list. The answer is, oh, I knew these would be hopeless, these pens. Confidence. Should have brought my own. Absolutely, confidence comes up all the time, and I'll address that. What else? There's something else. There's lots more, but give me another big one. What's a big one that stops you? Knowledge? Yep. Thank you. Anything else? Time. I mean, hey, we live in great times. I'm flat out. I got a week of mortgages and I can't find enough time to get through them all. So what the hell? Why would I bother diversifying? Great point. Thank you. Anything else? Time, confidence, knowledge. Clients. Yep. I reckon we've nailed them. I've got 5. You've come up with 4. Let's have a look at it. The pathway, as I see it, is pretty much this. The first thing you've got to look at is capability. If you have a certain number of hours in the week and you can't find the time to do it, then find the time by changing your business model. So if you're serious about this, it's on the radar and it's part of your plan, you want to build a business that's more robust, that's going to be more valuable in time with a new revenue stream, the starting point is capability. The second point we're going to address today is competence. And fortunately, someone here talked about knowledge. Same thing. If there's only so many hours in a day, I change my business model. I'm now carving out time. The very next step, these are 5 steps, the very next step, invest in myself to build my competency. And what follows that is confidence. Who said confidence before? I'm going to give you a gift. It's not a very expensive gift, but it's one of our compendiums because you answered the question, so thank you very much. But confidence is a huge one. We have to address confidence. And then once we're confident, and as you can see, it's like a continuum. 1, 2, 3, and the 4th thing is I have the confidence. Now I get a call. One of my clients says, who's CFO of a pharmaceutical company, they're in your database, you did the mortgage for them, come and see me. I want to have a talk about you handling the business. Here's all our information, here's the financials. That's what we've got to get to the point where we can not go straight into a state of panic, but actually think, you ripper, I know exactly what I'm going to do. Confidence, conversations, and finally, and I'll talk more about this later, it's about completion. What do I mean by completion? I absolutely do not mean executing on the transaction in front of you. I do mean having a client for life. So, you know, this is where we're, these are the 5 steps. There is not an easy pathway in this industry to achieve these, and it does take some time, and I'll share with you some of the options that are open to you a little bit later. First one, capability. I said to you, time. Have a think about it this way. It's not an exact science, but if I'm a broker, I'm pretty much doing everything. And I know from my own experience, and I'm happy to be challenged on this, most of us as brokers want to touch everything. We want to touch every transaction and do everything to get the deal done professionally, the way we like it done. We're not going to drop our standards, but at some point, if it's on our radar, we have to think about all that. Everything there in blue, I suspect you can't really make much change to at all. But here, systems, processes, technology. Accept that you don't have to touch everything. Look into outsourcing. And if you think about that as a time clock, once you build this into your business, whoops, just gone backwards. Look how much time you've just created for yourself. What are you going to do with the time? As we talked about before, you've got to get competent in this space. We still haven't got to the pharmaceutical company and the CFO yet. Here he is. Because we're investing in ourselves. We have to do that first. Don't rush it. Slow down at the start to hurry up at the back. Competence is all about the whole SME space. It's a different beast. And the thing about it is, it's not just about a P&L. It's about learning the story of the SME. It's about when you sit opposite your client, they are not looking at you and thinking, that's the guy or girl that did my mortgage. They're looking at you and saying, I really want to deal with this person because they're a professional. They know what to do. They get my business. They talk my language. You just take everything out of play, every other competitor, but you've got to understand that it's more than just a P&L. Deliver that long-term value. And basically, the way I would pitch this to you, ladies and gentlemen, is ultimately, what do you want? You want to be the go-to. You want your clients to say, every time they have any need, that's who I'm going to go to. So invest the time, invest the effort. And if I had to give you one example of the best resource or your ticket to an SME relationship, hands down, the financial statements. The story of a business is told through the financial statements, the P&L and the balance sheet. Yet when I ask people, what do you use why do you have a P&L and a balance sheet? Why do business owners have it? 9 times out of 10, they're going to say, keep the tax man happy because I've got to do a tax return. Or what's the other reason we have financials? What do we need financials for as brokers? What is it? Lending. They're supporting documents, aren't they? They support the application for a loan. They are far, far richer than that. The graphic you see in front of you, is both of them, every single decision of that business is caught up in the Monty of all scorecards, the P&L and the balance sheet. Every decision and every indecision and every poor decision. But for a lot of us, they're bloody scary. They're a jumble of numbers, they're complex. I don't even know where to start. They don't have to be. We have to turn these numbers into something that's easy to work with. And one of the things that we focus on is mastering the language of finance and helping brokers to know where to look. So someone slides the financials across my table, I can scan them pretty quickly and I know straight away, not only as a business development goal, because I can see in there the things I need to be talking about, but I can see the trends, I can see the strengths, I can see the weaknesses, and can I pack that up into an agenda for our meeting with our client? You betcha. Simple as that. And then we're in a position, once we get better at this, in being able to articulate the story. The thing about it is you will have a client forever. So that's the first 2 steps. Now I've got to build your confidence up, or we have to build ours, so that we're in a position we can take that information and share it with our clients. Let's have a look at it. It's a simple scorecard. You saw the P&L on the balance sheet a minute ago. What if, through using just an Excel spreadsheet or something like that, I could come up with some ratios that take me into the heart, into the belly of the business? What if I could briefly review the financials? Do I need to be an accountant to do that? No way. It's a myth. I can give you the scorecard. We can drive the discussion. And then, you reckon that'd probably work, but let's keep it simple. I reckon you can come up with 3 or 4 numbers that will give you a very kind of meaty meeting with your client. There they are. It can be anything you want, but you know, gross margin. I'm sitting with the client. and I'm saying your gross margin has slipped from 36% to 34%. It's only 2%. 2% on sales of $2 million. That's $40,000. If I could just do what I was doing last year. Net margin. How many days is my stock sitting on the shelf? Doesn't matter. This is about putting you in the frame. I'm not going to get into that now, other than to say, on the left-hand side is the working capital cycle. I will touch on it again in a minute, but that's the fuel for a business. That's the lubricant. That's the short-term cycle. The right-hand side is how does money flow over the long term? Right. You ready? We're going to do the deal? We're going to have the conversation? We've gone through the first 3 steps. We've built our confidence. We've built our competence. We've changed the capability. There you go. The first thing I'm going to share with you, and I've only got a couple of these, but in Accendo, we built what we call a business insight discovery tool for people just like yourselves that want to break in. Why did we build it? Because there wasn't anything in the market that was adequate. This is a 7 or 8 page document, and basically it's a fact find for SMEs. You can see some examples on the right-hand side. Every question you would ever want to ask in a meeting with a client to make you look good and capture the information you need to get an approval is in this one document. That's something that we have found has really helped so many people. Come back to it. The second thing, I said I wanted to build your confidence so you could have the meaningful conversations. I won't do that. Talk to you about the short-term cycle. Cash starts at the top. I buy some stock, sell the stock, create a debtor, collect the debtor, and cash comes home. We'll put some numbers around this in a minute, but visualize that for a minute. Visualize sitting in front of your client and just imagine if you could walk into their boardroom having had with the fact find and drawn that up and show them what one day's improvement in selling their stock and debtors means to their cash flow. Do you think you'll have their attention? 100%. We'll do an example in a little while. Oh, here it is. A little while has arrived. One day. Any of us can do this. All we need is the sales number. And we divide it by, what's 365? You guys know, what is it? Number of days in the year. Or with our stock, we grab one number off the P&L and we divide it by 365. Bang! You're the ones that are here. You've just drawn it up and you've said to the CFO, every single day you sell your stock faster is $7,862 more cash flow in your bank account. Every day you collect your debtors faster, it's almost $14,000. One day, $21,834. You're back at the table, you're sitting opposite each other. You've used the P&L, it was so easy. Just the sales line, the cost of goods sold line. And you say, what about if you could get 10 days improvement, which on your scorecard, they probably were. And the client says, but hang on, I got an overdraft of 150,000. You get 10 days improvement, you don't any more. You got 70,000 cash in the bank. And you've paid your overdraft off, and you've negotiated better conditions or better arrangements with your creditors, discounts, and the list goes on. We're still in the conversations. And I won't take too much more of your time, but this is an amazing one-page document that covers the dynamics of business. Has anyone ever had to, or know anyone that's had to go to a medical specialist because they're, getting some heart pains? What do they do? What do they recommend you do? Meditate, that's a good answer. What, do they ever put dye in? What is it? with an angiogram? What are they looking for? What was that? Artery blockages. And actually, I used this example not so long ago to a group of bankers, and someone said a heart. And I think I know what they mean. But no, we're looking for blockages. Well, there you go. Whoops, apologies. Sitting opposite the client, and you're now saying, you know what? Your profit was down on trending basis. Have you explored that any of these could have been the reason? Bang. Impact. Or my cash flow's down. Oh, my cash flow's down. Maybe we're carrying too much inventory. Doesn't matter. We're still only four of the points through, the steps through, but you've got that on a single page. And you got that. We can crunch some numbers really easily. And as you can see there, I refer to it as the power of one. And I'm just saying, I did the numbers. You know what? You could do some, none, or all of these. But what if you got a 1% increase in your price, or your volume, or your operating expenses went down by a day, or you collected your debtors? It doesn't matter. Point is, by our reckoning, there's an extra 262,000 in profit and 144,000 in net cash flow. And I tell you what they're saying, if they're not saying it, they're thinking it. No one's ever shown me this before. And so you achieve that, and where are you now? You are inside the tent. You are part of their team. You are not at risk. They are not interested in inviting a banker in or a competitive broker. You're the professional. And I love this expression, always take the long road. That's not so much the expression. The one I want to share with you is this. What I mean by that, by the way, is it's not about the transaction in front of you. This is about building client relationships strategically. The expression I love is this. Do you want to rent the client? Because that's a transaction. Or do you want to marry them? Because that's the real deal. That's diversification's holy grail. And keep in mind, more so than any other time in history, you're the rainmaker. And I'll explain. Who do you reckon SMEs would have nominated, if you asked them 15, 20 years ago, their most important relationship was with? The banker. Why? Because they knew their story, they understood their financials, they could approve things, they could make decisions. What's happened? Why is that no longer the case 20 years later? Why? Well, bankers, bankers get rolled all the time, don't they? You never have a bank manager for 15 years. The training isn't there in the bank. So what do you think can substitute for that? It must be really obvious to all of us. You, the broker, because they love you, they're time poor, they're independent. You're independent. You can find them the best deal. You go and see them and you get their business. If you want to invest the time. And they only have 4 sources of capital. There's only 4 places they can fund the growth of their business. One is profit, but that won't be enough. It'll help. Creditors, well, you can stretch them so far. Rob the piggy bank, break it open, put some more of my own money in, or go to the bank. And I'd love to put a line through that and say, go to the broker. Yeah. Know the story, learn the story, share the story. You are in a unique position where you straddle 2 relationships. One is with the SME client, invest in understanding them. And 2, you are also the agent to a lender. You're the eyes and ears, so you need to be able to articulate that story as part of your submission process. And then you're hooked in for life. Very quickly, you've already heard a bit about cash flow today, and I agree with everything that the other guys said, Tap Fund and Strive. But have a think about this very quickly. A supplier has payments due at the beginning of each month, but they don't get their income to the end of each month. So they've got this gap, and it's probably about $10,000 over a 15-year period. 15-day period, they've got a choice. They can stretch out the supplier payments, they can tap into their GST funds, delay payments, or not pay themselves. None of those are palatable. So what should they do? They go to Finstro, they get a line of credit, costs them 2%, and some of you will look at me and say, he's a nutcase, he must be smoking drugs because 2% is 24% a year, why would I do that? I'm not smoking drugs, I'm a nutcase, but I'll tell you why I'd do it. We get access to our $10,000, and like the other two speakers said, it's not about the interest rate. We get access to the $10,000, we go to our suppliers, we make good, and we ask them, can we get a discount on all our future purchases? They agree to a 5% discount, provided we pay cash on delivery. So it cost me $200, I got a $500 discount, I'm $300 ahead. Why? Because short-term funding is never about the interest rate, it's about the solution, and the solution is right there in front of us. And we're very fortunate that Finstro are able to support these sorts of things. So, you know, you should talk to Paul and Nick during the course of the session today. Look, there's a lot of different working capital solutions. I'm not going to get into them now. It helps to understand what they are and find the right tool for the right job. Here's what I do want to share with you. At Accendo, I have two partners. They're both in Perth. I'm obviously Sydney-based. One is Trent Carter, who's the state president over there of the FBAA, and the other is a long-time friend and colleague, John Scambaluri. We offer online, live, short courses. If you're interested, jump on board or have a look at our website. We'd love to hear from you. Or, and I'll give you some more information in a minute, take up the Finstro free education. Oh, I thought it was up there, sorry. Yeah, get access to the free education trade account from Finstro, which is basically a pre-approved $500 limit for all your education needs. So more of that to come. There it is there. There's just a little bit more information on the programs we offer, the short course. And before I move on, the Ignition Broker Mentoring is that 6-month journey that takes that person from day one that says, I get you, but I really want to do this, but I need help. And 6 months later, they are submitting commercial transactions for approval to the brokers. So we run the whole program around building that confidence, awareness, looking at the marketing, looking at the technical skills and all those sorts of things. So there's the Finstro offer. Paul, have you got a bunch of those as a handout in case people want to? Perfect. So go and see Paul or Nick and scan it if you want to take advantage of it. And in thanking you, there's a few people I want to thank. First of all, everyone here. I really appreciate you listening and taking the time. Secondly, FBAA for putting the event on, and Finstro for supporting this event right around the country. Like, this is real. They're not fair weather friends, either FBAA or Finstro. They've been supporting this industry through thick and thin, and we should aim to support them. And I also want to just acknowledge and thank all of the sponsors at the back of the room. Really appreciate your support. Amfin, a client of ours, so it's good to see you guys up there. I'll come and say good day in a minute, and that they will help you if you want to refer business on. But it's a great event, great to be live. Happy Christmas, and thank you.
I love it when I don't.
Thank you so much for that lovely introduction. It is wonderful to be here today. I just wanted to firstly thank the FBAA, Peter, Mariah and your team for organising these events and being so nimble and flexible with pivoting them to online. Obviously, we'd all like to be face-to-face, but we're all getting pretty used to Zoom and how to navigate our way around that. So thank you so much, FBA, and also just wanted to acknowledge all the other really interesting and wonderful speakers today. What a great group of speakers, interesting topics, and of course the sponsors for today's event. Thank you so much for helping make these events happen. Now, for me, what I'll do is the first thing I'll do is I'll share my screen. So my presentation is on the screen. Now, before I get started on my subject today, building the right brain mindset for business and life success, I'll just give you a little bit of a background on me. Not too long. Haven't been in the industry quite as long as Pete, but I have been in the industry a long time. My story in broking started in the mid-90s when I came out of corporate background. I worked in the finance industry, but on a wage and a salary for a corporation. Entered mortgage broking in about 97, or it was 97. I joined Aussie Home Loans, spent a little bit of time there learning the ropes, and then moved into starting my own business. And over the following sort of 10, 15 years, started and built and exited all of those businesses. And as I went through those reiterations, I was constantly trying new things, figuring things out, building teams, finding loans, approving loans, even collecting loans, overdues at one stage back in the mortgage management days. So I guess you could say I've been involved in every part of the credit cycle from A to Z. So I've got a pretty broad experience of life in every part of the credit cycle. And then, of course, in the mid-2010s, I transitioned into coaching full-time, even though I'd probably been coaching more or less during building those businesses, both clients and team members and so forth. So that's a little bit of my story. I guess I've spent the better part of 3 to 4 decades trying everything in life and business to find out what works. Okay, so yeah, that's a little bit about my background. So let's go on to the first slide, and I'll give you a bit of a run through a bit of an agenda for today. So I've told you a little bit about myself. I want to talk a little bit about how I define a business success, a little bit about how we would define life success, and then today I'm going to talk about blueprinting, managing external events like COVID and our mental health. Also, why we need a roadmap, and then a little bit about the building blocks of well-being, of which there's 3 main areas. One is beginning with a mindset shift. Then there's the 4 pillars of well-being. And then there's what I call the Olympian team model for managing and maintaining mental health and business health that go together, or mental health and business success. So I guess as I'm talking, I probably interpose the words health and success across, but they both essentially are the same thing for me. Business and life success are indivisible from business and life health. So let's move on a little bit to what I would call business success. So for me, particularly in the mortgage broking industry, business success is what I would describe as transitioning from a job or being self-employed, but essentially a job as a mortgage broker, which is where we generally all start, to a business. So I consider having a successful business in mortgage broking to owning a business that does mortgage broking as opposed to being a mortgage broker. Now, when you've got a successful business that does mortgage broking, you can still be a mortgage broker in that business, but essentially that's the difference that I see between being a broker, a self-employed broker, or an employed broker, and having a broking business. So, the question you would probably ask yourself around that to understand whether you've got a business or a job is, would someone want to buy your business as opposed to buying your trail book? If your business is simply a value of your trail book, it's not a business. A business is valued at, the ability for someone else to come in and take over running it, systems and processes and team and so forth. Now, life success for me, is when we tend to speak to ourselves in the same way as we want to act in the real world. In other words, our inner state matches our exterior state. And you'll see I'll talk a lot about this at various stages in this presentation. But that's what I consider a balanced life, a success. And success is a bit of a nebulous topic, right? We all have a different definition of success. But in the confines of this presentation, that's what I consider, success to be, when your inner world, the way you think, is the same as the way you act in the world. So I could probably even define that a little bit further and use a couple of words that you may or may not have heard before. That's interoception and exteroception. So interoception is, I guess, the internal sensory system where our physical and emotional states are noticed, recognised and responded to. So it's how we feel and sense our inner self, and we notice and recognise and respond to our inner state. Exteroception is our sensitivity to external stimuli and events, such as, things that are outside your body, your exterior world, and how we perceive that external environment and how that affects our inclusive or overall attention. And that's why it takes blueprinting after we make a mindset shift in our mind to build out this internal and external balanced world in both life and business. So with that being said, let's move on to the next slide. Now, talking about blueprinting quickly, what do we mean by blueprinting? So we're all in the mortgage industry. We all deal with people either buying and building homes. So let's use a metaphor here about building a home. To build a home, we need a couple of things, right? We need architectural drawings. This is the blueprint. So you don't go out and just start building a home based on something that's in your head. We get drawings made up, the design, so that we know what we are building. And importantly, what the purpose of that building is. So these things have got to be connected. So the blueprint has got to make sense. That is the guide that shows us what and why we are building something. That's what a blueprint is for. We're building a house that looks like this, and here's the design. And the reason we're building it is we're going to live in it, or we might rent it out for passive income. So, in that context of building your own mind, comparing it to building your own home, let's talk a little bit about what I would call self-containment. And this is the skill and ability to stay on track and get back on track quickly when life throws curveballs at us, which it always does. I'll talk a little bit about this more later in the presentation, I should say. So self-containment is when our state of being something we control internally, as opposed to being overly affected by the curveballs that life throws at us. And particularly in this industry that we know, the mortgage industry, mortgage broking, there's always lots of curveballs, right? And we could probably fill a book with those curveballs, which are totally over and above, normal life events. And then, of course, we customize those designs. Going back to the blueprinting for a house, we have an architectural set of drawings, and then we might customize them to have exactly the house that we want. All right, so it gives us, as I've got on the slide here, a framework to follow that is proven to deliver the result that we want. And it is a path that guides us, as I said, whilst also encouraging and allowing some customization to have the house that we want, or the mind that we want, the business that we want. So that's what blueprinting means in this context. All right, just to talk a little bit about external events and mental health. So, question I want to ask here, is it an obstacle or is it an opportunity? And we know that, look, we can't change what's out of our control, but we can change the stories we tell ourselves about those things. Just want to repeat that. Even simple as that sounds, we can't change what happens mostly out in the world, those external events, such as COVID-19 and the pandemic, but we can change the stories we tell ourselves about them. This is what we mean by changing our story about COVID-19 without actually changing COVID-19. And just as an example of this, and I hope this relates, there might even be, you know, some people in the audience who I've worked with. But in our broker coaching business, the 10X Broker, going back to probably about March, April, May last year, when COVID was really ramping up and there's a lot of fear around, and a lot of brokers were really wondering what was going to happen. So we got together with our members and we really encouraged them to look at this pandemic and the lockdown, which was just looming, as an opportunity to work on their business rather than as a problem to batten down the hatches and, you know, survive. We actually repositioned it as an opportunity to work on your business and not just survive, but thrive, and also to be ready for when the market starts to take off again, which it did. And we all know what's happened in the last 6 to 9 months in the property and mortgage market. Despite the pandemic still being about, it's gone ballistic. So a lot of our 10X members are absolutely flourishing now because they changed the stories and got to work building the infrastructure of their business, ready for things to take off again. So they turned an obstacle into an opportunity simply by changing stories. It's a really important lesson, and I hope, you know, that resonates. It's one of the key markers of all people that have shifted mindsets, and it's a key building block in rebuilding your mind, brain for success, is changing the stories we tell ourselves. So why a roadmap? Now, once again, most of these concepts are fairly simple, but they're really powerful. We need a roadmap if we're going somewhere in the car, for example, and we need a roadmap in life and business. Now, why do we need a roadmap? Because we need to know where the goal is. Where are we heading? Okay, so that's the big picture. So where is the destination that we're looking to get to? Then the map allows us to watch each step along the way and make sure that we're staying on track. But equally important, in fact, I would almost argue more importantly, is it allows us to get back on track. It's like the rudder on the boat. You know, we occasionally speed off track a little bit, but if we've got a map to reference back to, we can get ourselves back on track fairly quickly. So a map is super, super important in business and in life. Yeah, we'll all drift off track occasionally, but the map allows us to get back on track. And what does that give us? You know, it gives us the how, in, you know, to go further from what I said before about the blueprint being the what and the why. The roadmap shows us the how. How are we going to achieve that blueprint? So the how in building a house metaphor would be the building contract that outlined all the different stages of the construction, you know, the slab down, the frame up, the fit out, etc. So that's what the roadmap shows us. That's the pathway to get the blueprint executed. Okay, so I hope that makes good sense. And it's really vital. It shows us the path. It shows us where to place our attention and our energy and our time. So I would call that the antidote to distraction, as I've got on the screen there, right? Very important that we understand that. And what does having an antidote to distraction mean? What does having a roadmap mean? It means that we have the confidence and the belief and the focus to stay on track. I think one of the biggest challenges that we all have in life and business and our industry is a lot of distractions, a lot of things going on, a lot of moving parts in our lives and in the world. So having a roadmap to follow that we know is proven to take us where we want to go is very important, in having the confidence to make decisions, the belief to make decisions, and the focus to stay on track and ignore distractions. And in an incredibly distracted world, that is really, really powerful. So let's just talk about the building blocks now, the building blocks to life and business success. I've sort of distilled it down into 3 sections. One is beginning with a mindset shift, which I've spoken about a bit already, and I'll speak about a little bit more in a moment. the 4 pillars of well-being, and the Olympian model, the Olympian team model of establishing and maintaining your mental health and freeing you up to focus on what you do best and what you enjoy the most. So let's dive into those a little bit more specifically. Here we go. It's all on the screen, I think. Good. So I mentioned briefly before Interroception and Exteroception. Now, they're fancy sounding words. Interroception simply means your inner state, right? And that's very important that we understand what those two things are, because the goal here is to align your internal and external worlds as much as possible. Your lived experiences, how you go about life and how you perceive the world, is the same as your internal experience of the world, okay? And the stories that we tell ourselves determine our inner state. This is a really powerful sentence. The stories we tell ourselves determine our inner state. Our inner state determines our thoughts. Our thoughts determine our actions, and it's our actions that determine our reality in business and in life. So the logic then is, if you want to change your reality, you change the stories. Now, I might just repeat that. The stories we tell ourselves determine our inner state. Our inner state then determines our thoughts, our thinking. Our thoughts determine what action we take, and the action we take determines the reality that we create for ourselves. So if we want to create a new reality, a blueprint for success in life and business, we need to change the stories we tell ourselves. I want to mention, and I'll talk about this in a bit more length at the end, the 10 consecutive days challenge. This is something I've borrowed from Tony Robbins, and I'll talk about it a little bit more at the end. It's a really terrific place to start with shifting your mindset. It's where the work to transform and change those stories starts. You know, so we begin training our mind to operate and respond differently to the events of daily life. And the truth of it is that how we respond to the small things in life is generally how we'll respond to the major things in life. So if we want to have a big effect down the track, we start working on the small things now. So I'll get to a description of what the 10-day challenge looks like at the end, but this is how we start with a mindset shift. So we've got to change the way we think before anything else can be changed. So let's talk a little bit about the 4 pillars of well-being. Okay, so awareness, which is our attentiveness to our environment, our bodily sensations, our thoughts and feelings. This is the interoception, the degree to which we notice or not the details of our own experience. So just have a think about that. You know, how aware are you of your own experience, of how you are in the world? What's your internal thoughts and feelings and bodily sensations? How connected are you to that inner world? That's awareness. Connection, number 2, is how related and connected we are to others and the world around us. So the degree to which we practice appreciation or gratitude, you might want to call it, kindness and compassion. So connection is very important. Insight, this is how much and how often we cultivate curiosity and self-knowledge. This is really, really important. The interest and commitment we have to personal development and personal growth. This is often referred to as having a growth mindset. Insight. And purpose. Purpose is probably the biggest one. Purpose tends to be the fuel in the engine that drives everything. The degree to which we understand our values and our motivations, and then using them as the North Star to guide us, by which we consider and guide our own decision making, our purpose. Why are we doing what we're doing? What is our underlying purpose? These are the 4 pillars of well-being, and each of these pillars zeroes in on specific skills that can be learned and strengthened over time. Now, obviously, I can go into these in more depth and probably will in the course that will be available on the FBAA website. And they have been studied in laboratory environments and shown to improve over time with training. So I would argue that if we're going to find a sense of happiness and balance in our work and life and well-being, we need to cultivate each of them in equal measure. So they're not separate. Instead, they build on top of one another. So that's why I call them building blocks. They build on top of each other. They're not separate to each other. Now, interestingly, last July, just gone, there's a foundation in the States called the Kaiser Family Foundation that conducted a poll of adults in the US, and more than 50% of US adults reported a decline in their mental health due to the worry and stress over the pandemic, which is up from 30-odd% in March of 2020. Now, given how stressful the past 12 months have been, this framework, the 4 pillars, offers us something concrete to consider as we all search for an antidote to our own sort of malaise, which, particularly with where we're all at now with lockdowns and pathways and vaccination targets, and really getting overwhelmed a bit by that. So this gives us an antidote and a framework to pull ourselves out of that. So the framework considers, that there's a difference between the kind of happiness that depends on what happens to us in a day and a sense of well-being that comes from within. Again, this is interoception versus exteroception. So it's about building and on top of the kind of happiness and fulfillment and success in business and life, that blueprinting that comes from what happens to us in a day, versus what I'm advocating, which is a sense of well-being that comes from within and is largely immune to external events. First kind of happiness, the external one, can easily take a dive when there's adversity, right? Such as in this time of lockdown and recession, or almost recession, where bad things seem to happen every day. It's catastrophizing out there. But the second, the kind I'm getting at, offers a sort of inoculation, which is a popular word, vaccination. It offers an inoculation against these ups and downs. A meditation coach, a friend of mine, actually recently called it being happy for no reason. Right? So lock that in. Being happy for no reason is the best kind of happy. But it's really the fourth pillar, the sort of the foundational one for me, which is purpose. That's the one I'm really interested in. So what kind of reflection can we make about purpose? Can we find a sense of meaning larger than our own self-interest? And maybe this upcoming new year, which seems to be rolling around way too quickly, will give us the opportunity for a new take on how we bolster and build our well-being. So when you're thinking about your planning and your goal setting for the coming year, think about building a framework for well-being rather than focusing on a lot of traditional goals. And and perhaps connecting with a sense of purpose might be the best possible resolution we can make. Now, moving on to the Olympian team model, which I've spoken about before, so I'll cover it here reasonably quickly. Now, none of us is an island, right? And we need to stop thinking that we can do everything, that we can fix everything, that we can get over it and plow on. So my opinion on this is that our business and mental health is a team effort. Of course, like in the Olympics, which is where this Olympian team model comes from, you have to run the race, but you have a team of people around you. And you only got to listen to any Olympic athlete that's interviewed when they medal. They're always giving thanks to the various people in their team, that they work with, that keep them supported, keep them on track, free them up to focus on what they need to do to run the race to the best of their ability. Okay, that's the Olympian team model. And, of course, the same applies with blueprinting your mind, brain for success in both business and life. It does come down to you, of course. However, you're not and should not be alone, because we all need help and guidance. And that's why I say personal health and wellbeing is a team effort. Now, what are the 5 team members, if you like, of the Olympian team model? We've got your inner, that's your mindset. I've spoken about that. That's how you think about yourself, your inner state, the stories you tell yourself, and where you find happiness. Do you need your happiness drawn from what happens out in the world, or can you rely on being happy for no reason? Then there's your staff. Now, you guys are all mortgage brokers. You might have team members already building a business. So that's your staff members in your business. That's also part of your team and part of the culture that you want to build in your business. That plays a very important role in blueprinting your life and business for sort of balanced and consistent success. Then there's the one I call the confidant. That's the one person that you have in your world that you would tell anything to, but you can speak honestly, openly, and with vulnerability, and without being judged or measured in any way. So that's the one person that we can speak to. This could be a family member, it could be a friend, it could be a coach that you can go to and have those really honest conversations anytime that you need to in a judgment-free zone, okay? Very important. Then we've got the club, that's our community. This is probably the one that's been sort of threatened the most at the moment. Now, your club might be might be a sporting club. It could be other mortgage brokers like today. It's a community where you feel part of things that's sort of generally separate to your home life and separate to your work life, your customers. You've got this other sort of third world where you've got a community of like-minded people where you feel part of things, you feel part of the community, you feel connected, and you share common experiences, whether it's sporting, business, it could be something like Rotary or Apex or BNI, those sorts of communities. And then the last one is advice. Now, these are generally either coaches or advisors around you that help build a strategy and keep you on track to that strategy with building your business and, of course, your, I'm calling it your mental health, but essentially it's your well-being, right? So your business and life well-being. They're the 5 team members that go in the Olympian team model. Now, let's go to a bit of a summary. Now, there's a couple of things I want to touch on here with the summary. First thing is FBAA have kindly organised for some short courses to come off the back of this presentation that you can access anytime at the FBAA website. I'm not exactly sure when they'll be up and available, but it should be fairly soon. So you can go in there and revisit all of these topics, watch some really sort of brief but on-point videos that I can guide you through a process and a course to follow to reference and get back on track with all of these topics to help you build that blueprint for life and business success. So those short courses will be on the FBAA site fairly soon. Now, the other thing, I said that I wanted to talk a little bit more at length about the 10-day consecutive challenge. As I said, this was created by Tony Robbins quite a long time ago. I think it's part of his Awaken the Giant Within program. I've never done it, but I read his book and I love this challenge as a trigger point or as a starting point to start shifting your mindset. So let me just go through it quickly. It's a challenge that you need to complete 10 consecutive days following 4 separate rules until you've completed the 10 consecutive days without any glitch whatsoever. And it's designed to kickstart the process of retraining your mind into a new version, you know, targeting your best self. So rule number 1, for the next 10 consecutive days, you're not allowed to dwell on any non-resourceful thoughts or feelings. You have to refuse to indulge in any disempowering thoughts of self-talk, and you have to immediately step away from negative inner talk or inner vocabulary or even metaphors. So this rule is you must immediately halt yourself from dwelling on negative and non-resourceful thoughts and feelings, which happens to all of us dozens, if not hundreds of times during a day. So that's rule number 1. Rule number 2, when you do catch yourself beginning to focus on the negative too much, which you almost certainly will, you immediately need to use what I'm calling, that appreciation technique to redirect your focus towards more positive emotional state. I spoke about that earlier. Different people call this situational gratitude or on the fly gratitude, so that when something negative, a negative thought happens and you do find yourself dwelling on it, I want you to immediately shift to a different form of self-talk. So instead of the negative talk, short-circuit it by posing the following questions to yourself as your first line of attack. Now, examples of these sorts of questions could be, what's great about this? What's not ideal yet? What can I learn about myself from this? This is one that I did some time ago that really fundamentally changed my life. No matter what happened to me, whether it's somebody annoying you in traffic, somebody saying something that might trigger you, seeing something on the news that might make you angry, I trained myself to, instead of falling down into a state of dwelling on that negative news, I used it as a trigger to say to myself, what can I learn from this? What's great about this? What's not ideal about this situation yet? And that very quickly got me back onto the right path. Simple as that sounds, it takes a fair bit of work. So that's rule number 2. You've got to catch yourself and pivot to different questions. His course also talks about morning empowering questions and evening empowering statements. So in the morning, you're to spend 5 minutes, as soon as you wake up, asking yourself 3 to 5 empowering questions. Because in the morning, if you do that, like, what can I achieve today? What's 3 amazing things I can do? What's a short power list of things I can accomplish today? Make it pretty simple. Just asking yourself those 3 empowering questions at the start of the day sets your mental state in the right way, and the rest of the day follows that theme. In the evening, the last moment before you, or the last few minutes before you nod off to sleep, give yourself a couple, 3 to 5 empowering statements about things you achieved for the day, so that when you fall asleep, the last things you're thinking about are positive things from the day, things that you accomplished. Okay, so that's morning empowering questions, evening empowering statements. Rule number 3, and you've got to do this for 10 days without missing a beat. The next 10 days, make certain that your entire focus in life is on solutions and not on problems. And the second you feel a possible challenge to this, you must focus on what the solution could be. And then you are to journal or use a journal to record these moments in your day. So it's a simple handwriting notes on a piece of paper, a journal. Do that for 10 consecutive days. So that's rule number 3. Rule number 4 is simply, if you do fall over or backslide, if you catch yourself indulging or dwelling on these unresourceful thoughts or feelings, don't beat yourself up, right? It's completely normal. That's the way you're used to thinking. So your brain will resist you trying to change your thought pattern. So don't beat yourself up. Just get back on the horse, focus on those rules 1, 2, and 3, and keep going. However, if you do dwell or indulge on the unwanted thoughts for too long, or any measurable length of time, you must wait until the following morning and then start the 10 days over again from the beginning. So the goal of this is to get through 10 days without holding or dwelling on a negative thought. Now, it's hard, but it's incredibly powerful. And if you do this for 10 consecutive days, you have taken a huge leap forward in blueprinting your brain mind for life and business success. And you must keep starting it over until you've done the 10 consecutive days, right? I'll talk about this a lot more and detail it a lot more, all of these components, in the short courses on the FBAA website, okay? So thank you very much. I hope that this has been helpful. I hope you take away some nuggets from this to take away into how you approach your life and business. Please feel free to reach out to me if you ever got any questions. Certainly go to the FBAA website and hunt down the courses when they're available. Thank you again, FBA. I've enjoyed the opportunity to speak, and I hope you have a wonderful day.